Hello everyone, my name is Matthew Frailey with BreakpointTrades.com. I've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our SPY systems. Been doing this since 2003 for individual traders and professional institutions, some of which I consult with on a weekly basis. Been a lot going on with the markets, and let's go and get right to it. First off, a week ago I did two video newsletters on the weekend, one on the general market and one on commodities. And in that news video, I discussed commodities and gold in depth, precious metals. And I made the comment, is gold ready to join the commodity party? And in fact, gold has had a phenomenal week this week with the market sell-off, and it appears to be doing so. So I think gold has officially joined the commodity party. Well, I'm going to go through the charts, give you a nice update there, and give you some additional comments. So let's go ahead and get started here. First off, looking at general commodities. I'm not going to look at all the other commodities here this evening. This is going to be primarily focused on the precious metals. But this first chart here is a ratio of the CRB, that's the commodity index, to the S&P 500. All right. And you can see commodities have underperformed relative to the S&P 500 since 2011 here. And you can see it on the moving average ribbon as well. These are the moving average ribbons I use. 9, 20, 34, 50 EMAs. Okay, so S&P has been outperforming for all these years. Commodities have been underperforming. And this started to change in 2020 and especially 2021. In fact, over a year ago, in my December 2020 market newsletter, I made the comments that it looked like commodities were starting a bull market and would outperform the general market. And that's exactly what happened in 2021. Commodities outperformed the general market. The CRB was up about 44% for 2021, while the S&P was up 27%. You can see how the ratio here started forming this rounded bottom. And you can see on the moving average ribbon, which has been bearishly stacked all those years, started flipping here, and it's trying to curl up. So there's a lot of energy here. If this really, wanted to begin some sort of multi-year uptrend with commodities outperforming relative to the S&P, maybe the S&P entering some sort of bear market, you could see how that could easily unfold. All right. Here's another commodity that's agriculture, DBA, relative to the S&P. You see the same thing, but it's been forming this nice base. The moving average ribbon is curling up. Again, I'm not going to go through all the commodities here tonight. I'm going to focus on the precious metals, so let's go back to those. So this chart here is a weekly chart of gold, and I discussed this 1 week ago in my YouTube video. Gold had a beautiful coil pattern. If you're into technical analysis, you know that when you have a coil pattern like this, it's called a coiled spring. It's another name for it. Energy is built up, and you usually get powerful moves from this. Well, we have a nice clean breakout from this coil this week. Another thing I like to look at is the GDX-GLD ratio. So what I've learned all these years is that it's best when the stocks outperform relative to the metal. Okay, GDX is the stocks index, ETF. And you can see the ratio has broken out of a coil itself. Furthermore, the moving average ribbon, what you'll learn with these moving average ribbons, guys, whenever they squeeze like this, all the moving average ribbons are tightly wound. That's when your energy is pent up and you're due for a powerful trend move, like here. And when they get too wide, you're usually due for a reversal in trend. So it's like up here, you got a top. Okay. Well, they've been tightly wound here for a while, and they're now starting to curl up. And there's a lot of energy here where if this really wanted to expand, it could produce quite a move in gold here. We could see gold, eventually take out these highs back here, I think. All right. So this looks really good. Here's a daily version of gold. It broke out of this coil here on the daily. So you have a fractal. You got a weekly coil and you have this daily coil. We broke out essentially last Friday, chopped around for a couple days. You had a buying opportunity here, and then boom, big power move up the last 2 days. All right. Here, the GDX GLD ratio, again, you can see how the ratio is pointing straight up. That means the stocks are outperforming the metal, which is what you want to see. Nice volume increase. Little overbought here short term. We're above the upper Bollinger Bands, but that's fine. I think at this point, pullbacks, consolidations will be buying opportunities. All right. Next, here's a monthly chart, and I showed this back then as well. This is the monthly chart of gold. You know, we had that bull market in the early 2000s that lasted until 2011. Then we had this bear market, formed this multi-year rounded base, which I talked about to our clients back then. Started a nice move up here into 2020. We've been in a big consolidation here. This has the look of a big cup and handle. And if that ends up being the case, you know, this could easily launch gold well into the 2000s, mid 2000s, 3000, who knows. You can see your moving average ribbon is not as pinched as you would want like this, but it's not expanded like it was back here. Again, you can see here where it was tightly wound. Essentially here, that's when you get your big trend move. Next, here's the gold S&P ratio. Remember, we looked at the ratios for the CRB, and same thing, underperforming, but you can see how moving average ribbon is tightly wound and curling up. So there's a lot of energy here that could produce a big move. Also, just looking at the pattern, if you know a little bit about Elliott wave, you can count 5 clear waves down here with MACD divergence. So, and it's broken out here. So definitely looks like this downtrend here is ended, and it's going to begin some sort of longer term uptrend. Next, moving to silver. Silver hasn't been as strong as gold. Now, I always consider silver more as an industrial commodity. It's used in a lot of things. Remember, it's the best conductor of electricity. And so it's still ultimately in its coil pattern. We got to keep an eye on this, see if it breaks out. It should if gold does what we think it will. Here's a monthly view of silver. Silver's been in this huge $8 range for the last year and a half, between $30 to around, $21. This is their big support. Moving on to the stocks. GDX, that's a way to play the stocks. It's the gold miners ETF. We broke out of this coil pattern and a little double top this week. Great move. Quite a nice move today. Now we're well outside the Bollinger Bands here, so we are a bit extended, but the volume's good. No MACD divergence. The ratio, GDX GLD ratio pointing up, so may get a consolidation here soon, but that would be a buying opportunity. In fact, if we get a gap up on Friday, I'm recording this on Thursday night, February 17th, that might be an area to take some short-term profits. But overall, I would view a consolidation as a buying opportunity. Next, here's another daily chart of GDX. Instead of the ratio, I have the moving average ribbon here. You can see it's curling up. Same other indicators look the same. Next, GDXJ, that's another ETF I like to play. That's the junior stocks. And it broke its downtrend line here on Thursday, followed through. Testing the 200-day moving average now. You can see the ratio here. Moving average ribbon. Had a nice little double bottom back here. Now, the way the gold cycle works for the stocks, usually you get the major stocks, the big ones rally first, and then what happens is the smaller ones follow. All right. So that's why this is lagging GDX a bit. But as this move matures, this will play some catch up. All right. This also tends to move a larger percentage. I like to own both GDX, GDXJ. Very short term, like I said, it is overbought. Here's a 60-minute chart. There's First off, there's no MACD divergence, so I consider this a healthy move. All right, but short term, look at the moving average ribbon. Very, very wide. Remember, your low risk buy opportunities are when there's moving average ribbons pinch, like here. That was a bearish pinch. Got a quick thrust to the downside. Pinched here for a bullish move. Pinched here for a bullish move. Here they're too wide. Think of the moving average ribbons. They go through periods of contraction and expansion. They get too expanded, like they are, like here. It's too wide. You need to pull back. So short term, they're extended here, guys. I'd be cautious chasing them here till you see some sort of consolidation. But it is a healthy move. Next, SILJ. That's a silver junior ETF. That's another thing I'd like to own. Way to own some of the junior silver stocks. Let's look at some individual names. GFI, I discussed this last weekend. Gold Fields. I mentioned that this had a beautiful cup and handle pattern. You can see it here. Broke out. In fact, on Monday, you had a buy opportunity on Tuesday on this pullback. In fact, this happens a lot of times. You break through resistance, gap up, come down and back test it, undercut the trend line a little bit. Those are buying opportunities, guys. And then boom, big move again. Close. We're way outside the Bollinger Bands here, but overall the pattern measure is much higher. The ratio here is also healthy. You can see your moving average ribbon. It was pinching here just before this big move. It's going through a period of expansion now. Next, BVN, another gold stock. This is one we had on our watch list back in early February. Had a little falling wedge here into the 50-day moving average. Volume patterns are good. See your moving average ribbon? See how useful this is, guys? It was pinched here, right here. You got a nice quick move up, and then it pulled back. It says first pinch. What I mean by that is the moving average ribbons, when they're bearishly stacked and they change from a bearish stacking to a bullish stacking, and then the first consolidation pinch or squeeze. That first squeeze is always a very low risk trade where you get a big move. Right here, you can see that. That's been a big move from this point to this point. I call that the first squeeze, first pinch, after the moving averages. First flip and then pinch. All right, that's something you could use in your everyday stocks. Next, GOLD. It's been a monster move, had a beautiful coil pattern like the metal. Again, this is the stock, Barrick Gold, not gold itself. But you can see everything set up here. Ratios going straight up, ribbons straight up. Again, you're overbought. Look at your 14 RSI is overbought. That doesn't happen that often, right? Look, back here it's overbought. Here it's overbought. So be careful here short term. We're also 2 days outside the upper Bollinger Bands now, all right? But the volumes have been very good on this move. It's healthy. The MACD is healthy. So more than likely, what we may get is some sort of consolidation, you know, and then another move. Okay. Great move. Now let's look at the weekly. Here's the weekly view. So last weekend I was showing this is a falling wedge. You know, basically a multi-year wedge, or about a year-long wedge that had formed. In fact, it's hitting its first target, which is this symmetry move that you get from the back of the wedge. You add it to here, measures up to about 24. That's your first target area. Maybe we get to here and then go through some sort of consolidation before going up again. Would be my guess. All right. Next. Here's a 60-minute chart, just showing you very short term. It is getting quite extended here, guys. So be aware of that. Next, AUY, same deal. This is Yamana Gold. Had a beautiful coil, busted out hard. Ratios going up. Everything looks good. A little overbought, but you know, super strong pattern. Nice MACD. Everything's set up. And you know, the ADX indicator down here, nice nicely expanding. Remember, I showed this over a week ago. This is played out. Here's the weekly chart. I showed this wedge pattern over a week ago, and it's playing out. This one measures up to about 515 here initially, first target. You can see the ratio broke this trend line, curling up. Next, Newmont. One I was showing last weekend was in a coil. It really didn't do much early this week. You had plenty of buy opportunity right in here after breaking this little coil. And then boom, big launch today on expanding volume. I'd say the initial target is up into this point, this area. There's a gap up here. Notice your ratios nicely pointing up. FNV, Franco Nevada, another one that's had a super move. Volume expansion, ratio, moving average ribbon expansion. Sand, another one, broke out of a beautiful coil. Should work higher over time. AEM, another major. Big breakout today. This was tagged its 200-day moving average. If I got a consolidation here, I think it'd be a buying opportunity if you're not in it already. SVM, it's been meandering up. It broke this trend line that I've been showing. So this is one I already own as well. Hasn't been a power move like the other ones. I do like it because of the weekly though. Here's why. Here's the weekly chart of SVM. Falling wedge. Remember the wedge patterns on GOLD, AUY? It's just starting to barely break this wedge. So if you measure this back move, that's your target. Would measure up initially to $5. From this area in the mid threes, that's a pretty good percentage move. It's a silver stock. Here's Goro. This is one of the junior ones. Remember the way these gold stocks work. It's the big ones that go first usually, and these smaller ones go later. So this one is just starting to move. So maybe to get into this one early still. MTA also hasn't really launched yet. Like I said, guys, the way this market tends to move, usually your major stocks go first, and then it trickles down to your smaller ones. Especially if you can follow some of the junior gold stocks. There's a lot of them in Canada. You could buy some of those that haven't moved yet, and if the market stays healthy, the gold market, they'll eventually just start going. And so you can buy them, basically preempt to buy some of those. So again, guys, nothing set with this investing, but it does appear that the precious metals have the best chance that they've had in a long time to finally follow through. Remember, gold and these gold stocks have went through many false starts over the last 6 months. So I think this time they could finally be ready to join the commodity party. And it's possible we're just early on in a move that could last quite a long time. If we are in one of those moves, I've seen a lot of individual stocks in past moves go up 300 to 500%. Anyway, again, I wouldn't try to own all these that I showed. You know, own a few, own a handful, own the ETFs, whatever fits you. But it's going to be exciting to see what this does. And anyway, guys, take care. Have a good 3-day weekend. Markets close on Monday for President's Day. As you know, there's a lot of crazy stuff with the market right now with Ukraine, etc. Anyway, take care.